Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to my channel, and in today's video I'm going to be analysing Rio Tinto stock. I'm going to be using fundamental analysis to see if the company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So who are Rio Tinto? So Rio Tinto Group is an Anglo-Australian multinational and the world's second largest metals and mining corporation, producing iron ore, copper, diamonds, gold and uranium. The name Rio Tinto comes from Spain when, in 1873, a bunch of investors came together to form the company. So Rio Tinto itself is a dual-listed company, which means it trades both on the London Stock Exchange and the Australian Stock Exchange as well. So the company is on the main Australian index and the FTSE 100 index. Now let's have a look at the sales for Rio Tinto and the sales per business. Let's have a look at this section. So 62% comes from iron ore, that was from the 2020 figures, aluminium 21%, copper and diamonds 12%, energy and minerals 11%. Then sales per region, the majority of their sales come from China with 58%, United States has 11%, Asia, excluding China and Japan, has 10%, Japan has 7.5%, and you can see all of those other countries. So yeah, it's heavily weighted towards China. They do have most of their mines in the Far East. Now let's have a look at the income statement for Rio Tinto, and data is in US dollars, and it's from Macro Trends. So yeah, over the past 5 years, they've had a decent run, haven't they? The revenue's increased by quite a bit over the past 5 years. Looks like commodity prices have been good for Rio Tinto, and this shows in the profits as well. In the past 5 years, they've doubled the profits, so awesome stuff. We will see if they can keep it up, but fingers crossed that they can. Another good thing is their shares outstanding are going down. You can see at the bottom. This is good for investors because it means we get a bigger piece of the pie. Now let's have a look at the balance sheet, and the two figures I look at. Figure 1 is long-term debt. Yes, this has been decreasing over the past 5 years. Some small fluctuations year on year, but you'd want to see this going down and down, and hopefully they can do that if they keep on making good profits and they can pay more debt down. And then the retained earnings figure, a simple figure, but this shows accumulated profits over time, and yes, this has been going up over the past 5 years, so awesome stuff. Now moving on to the cash flow statement. The main figure I look at here is the cash flow from operating activities and the net change in property, plant and equipment. Them two figures together are free cash flow. Over the past 5 years you can see that, indeed we have been increasing their free cash flow. 2016 was a bit of a poor year, cash from operating activities. You can see over the past 4 years it's been good. Like I say, commodity prices over the past 5 years must have been in Rio Tinto's favour. Having a look at repaying debt and dividends in the cash flow from investing activities. We don't really have to talk about the debt because we saw it on the balance sheet bit. So the dividends bit, you want to see these dividends going up over time, because if the company makes more profits and cash flow over time, you want them to pay more dividends. And 2019 had a decent dividend there. So it's a little bit up and down. I guess it does depend on what the company wants to do. But I do know in 2021 they had a blockbuster dividend because I received it myself. So I think when commodity prices are good, Rio Tinto will pay good dividends. So now let's have a look at my key financial ratios for Rio Tinto. And ratio is absolutely solid. I like to see this above 1. Long-term debt to capital, there's not much debt in this business compared to the equity, with a 20% figure, so that's really good. I guess that mining companies can't afford to have a lot of debt if they suddenly start losing money if commodity prices go down, but it's good to see that they manage the debt well. Really good stuff. High gross margins, which is awesome. 81% in 2020, which is really good stuff. The net profit margin is a little bit all over the place, but it is consistently quite high, with 22% in 2020 being a good figure, and then 34% in 2018 being a bit mad. So as long as we can keep making consistent profits, and then some years we have some blockbuster years, over the long run it's looking like a fairly solid company financially. And then the return on equity wise, it's looking good as well. Even on the years where they're making less profit, they're making a decent return on equity still. Now let's have a look at the genuine impact stats, and two metrics I really focus on from genuine impact, with the quality metric being first. Very, very high. It's ranking 706 out of, I think it's like 7,000 odd stocks, so it's doing pretty decent there. Profitability very high, financial strength strong, capital allocation very sound. Overall, it's looking like a good quality business. Then on the value metrics, it's looking cheap based on the fundamentals. Income statement is looking cheap, balance sheet medium, and cash flow very cheap. We love to see cheap free cash flow. In the bottom left hand corner, I've got the growth metrics, because growth is a very important part of investing. Looking decent across the board. So, and then you can see across the three different metrics, the quality and value metrics rank the highest, and yeah, what can I say, awesome stuff. Now let's have a look at my analysis checklist for Rio Tinto, and we'll start with the first pillar I look at is profitable, high returns on capital and using low leverage. Across the board, it's all green. Across the past 5 years, profitability is very, very strong. That net margin as well of a 5-year average, 22%, really, really good stuff. Return on equity is very solid as well. I like to see above 15%, and it smashes it out in the park. Consistency is what I'm liking about Rio Tinto so far. Long-term debt to equity, it's looking very, very manageable. I like as little debt as possible, and Rio Tinto has very little debt and a lot of liquidity with a high current ratio as well. Proven ability to grow, so yeah, you can just see across the board over the past 5 years it has grown massively. Maybe this is due to 2020 being a really good year for the company, maybe skews the checklist a little bit, but hey ho, they have grown the numbers, so what can you say? Great capital allocation, they've been repaying debt, growing the dividend and decreasing shares. What can you say in terms of capital allocation of looking like a steady business? Good acquisitions as well. We've made a good acquisitions in the mining space, and overall it comes out with a quality score of 100%, so the highest I've actually done so far. And ultimately the most important thing when buying a stock is buying at a fair price, and currently the PE ratio is 6 and the price to free cash flow ratio is 7. So yeah, what can I say? It is looking undervalued based on these metrics, in my opinion. And yeah, we'll get into the DCF valuation in a minute, but yeah, it's currently looking quite attractive in my opinion. Now let's have a look at the discounted free cash flow valuation for Rio Tinto, and you can see from my model that I've used a required rate of return of 10%. The free cash flow figures have come from marketscreener.com, based on analyst estimates going into the future, the next couple of years. And yeah, it's showing a share price in dollars of $88 and fair value of the company in pounds of £65. So the current share price at time of recording is around £54 per share, so looking at like a little bit of uplift, and yeah, going into the future it might be a good addition to a portfolio, who knows. But it's currently looking cheap on the valuation metrics, and the DCF does also confirm this. So what are my thoughts on Rio Tinto? So full disclaimer, I own Rio Tinto stock and it's a part of my portfolio, so I thought I'd just let you know that before I give my opinions and thoughts on it. But yeah, from the metrics I've just seen, it looks like a very high quality business, so very profitable, high returns on capital, low leverage. It's currently growing based on the past 5 years, very consistent. And the valuation is looking rather attractive. Maybe the 2021 figures are making it look a little bit more attractive than maybe a normal year, but even so, I think this is a solid investment. If you're looking to invest in mining companies potentially, you're looking for larger stocks, maybe some UK stocks which are away from the crazy US market at the minute, it maybe could make a good addition. But yeah, what can I say? The analysis speaks for itself really, and you can't lie about the numbers. A bit of a caveat I must say though is it is a commodity business, so the revenue of the company comes from selling iron ore, selling diamonds, selling gold, and these different items go up and down in price all the time. So if the iron ore price goes down, Rio Tinto's revenue is going to go down. So yeah, that's just something to bear in mind if you're looking to invest into Rio Tinto stock. The revenue will go up and down with commodity prices, namely the iron ore price. But if you believe that inflation is here to stay and the iron ore price is going to continue to go up or level out at quite a high figure, then yeah, Rio Tinto will probably keep on making consistent profits. Personally, I like to have demand and exposure in my portfolio. I think having exposure to raw materials is a good way to fend off inflation of your purchasing power. If inflation is going to go up, then it's likely that the iron ore price is going to go up. That's just my opinion now. I could be wrong, and if it goes down, then Rio Tinto's stock will probably go down with it. But that's investing, isn't it, at the end of the day? You're just going to make an educated decision. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.